So the crypto market is showing an increased number of activity. We have seen a lot of people who are getting more and more interested in trading. Bitcoin right now is at 37 to $38,000, almost reaching $40,000. So it is not far from the previous all-time high. And with the pace that it is moving ahead with, we have seen increased number of activity and I would say an influx of users becoming more and more interested in trading because that is a really good way for people to earn. They have earned through this way in the past, and now it is the best time to do it again. So it is undeniable that people are getting more and more interested in trading. But now we have a decision to make, a big question to answer. Which exchange to use? If we talk about centralized exchanges, we know what happened with FTX. A lot of people suffered through it. They have lost a lot of money through it. So people are, of course, cautious. Then we already can see what is happening with the Binance these days with all the lawsuits and all the penalties and fines. So, of course, that is a barrier that is making people hesitant. And because of this hesitation, there, of course, is an increased number of people who are getting more interested in the DEXs, the decentralized exchanges, in which we do have problem of liquidity, which we do not have with centralized exchanges. But when it comes to decentralized exchanges, they are decentralized. We have custody of our assets in our own Web3 wallets. We don't give our access to anything else, and with the option that we can set the cap on our wallets, it makes it even more secure. And now it seems like the problem of liquidity is also being taken care of. The exchange we're going to talk about in this video, it is called Equation. Now, what Equation has to offer, it is a lot more than what is currently being offered in other exchanges, other popular exchanges. Like if we talk about GMX, we'll do the comparison and the comparative analysis between GMX and other exchange with Equation on what Equation has to offer. We do have incentives, we do have possibilities of earning rewards for choosing Equation for our trading needs, because you actually find this really fascinating. Things are getting so competitive at this point that it's not just about the service, because you have multiple platforms offering the same service. But now, for us users, I think that's pretty good that we are being given incentives to earn extra rewards for choosing one exchange over the other. But of course, we will not, let that blind us. But of course, the first priority is safety and security. So of course, we're going to talk about the safety and security of Equation. Of course, we're going to talk about the incentives that we have, how we can earn rewards. We're going to talk about the strategies that you can utilize because we can open hedging positions, which is a good risk management technique and strategy. We'll talk about other strategies as well. They also have a risk buffer fund, if I'm pronouncing it correct. This basically, I would say, compensate people for the impermanent loss. So we'll talk about the impermanent loss, what that is, and that is something that traders face. So Equation definitely has came up with solutions to problems that traders faces. It has came up with the services that the traders want, and a cherry on top, they are offering incentives for people to be able to earn rewards and get a good return. We're going to talk about the APY that you can get by staking the EQU token, which is the native token. We also can stake an NFT particularly, which will give us even more APR. So we'll talk about that as well. We have a lot of things to cover in Equation. So we'll keep things basic. So even if there's someone who is a beginner in trading, he or she can also understand what Equation is, what it has to offer. So if you are interested in it, which I think if you have clicked on this video, you are interested in trading, you are looking into it, and you probably are deciding on which exchange to use. At this point, I think using decentralized exchanges is best. Seeing what happened with FTX, seeing what's happening with the Binance right now. So it is much safer option to use decentralized exchange. But with all the different decentralized exchanges that we have, we need to take in account on different factors that will make us choose one exchange over the other. Of course, that includes the fees, that exchange are taking. That includes the safety and the security, the incentives, the strategies, the tools that a particular exchange offers that will assist us in trading. So we're going to talk about equation and we're going to do comparative analysis with other exchanges, and we'll see if that makes equation a better exchange than those other exchanges. Of course, you can decide that on your own. I'll be giving you guys complete information about it, and I'll keep myself objective about it. So, with this being said, we're gonna move ahead because we do have a lot to cover. I'll give you guys timestamps in the description so you can skip to whichever category, whichever segment that you are more interested in. And with this being said, we're gonna move ahead. Just make sure that you do your own investigation and research. And yeah, this is not going to be an investment or a financial advice as always. So make sure that you do your own investigation and research. And with this out of the way, let's get right into it. Now here we are on equation. As I said, we're going to keep things very basic, very simple, not going to complicate it. You may find other reviews, which will be, of course, complicated when we talk about risk management and the strategies and so forth. It can become complicated. But in this one, I'm going to try my best to keep things as simple as possible, starting off with a proper introduction, of course, on what equation is, what it has to offer. First thing first, this is not an average decentralized exchange. It offers traders the ability to leverage up to 200x, as you can see right now. Mostly it is way less than this. Of course, you need to proceed with caution when we talk about leveraging, but this is one of the most prominent things and prominent factors that is making equation stand out among the other competitors. But I would say that is just the tip of the iceberg because we do have a lot of things. If we talk about the key features that sets equation apart, so we'll get the competitive analysis and the comparison, out in the open in the start. Of course, I'll give a more detailed instruction on it as well. But the thing that makes it different, first up, we have this robust security measures. Because this equation, it does prioritizes safety of our funds. It implements advanced security protocols that ensure a secure trading environment, which is crucial in the world of DeFi. And since it is decentralized exchange, so we don't have to put our assets in the exchange. There is no KYC required and no extensive process of registration. All you have to do is connect your wallet and you start right away. Now, since it is on the Arbitrum chain, which you can see right here, it is on the Arbitrum. So you need to connect a wallet, a Web3 wallet in which you have this network. Now, personally, I'm using MetaMask. So what makes it secure is I have my assets in MetaMask in the Arbitrum network. I'm not putting them on the exchange unless I have to open up a position. I have to actively engage in a trade. Unless, I plan on doing that, I do not have to put my assets on this exchange. So the whole FTX fiasco, that can't possibly happen. There's no chances of that happening in a decentralized exchange. Now, equation, it does break barriers because when we talk about decentralized exchanges, of course, they are more secure, but they do have problem of liquidity. But in this case, it does break that barrier. We have deep liquidity in this, which I think is really amazing, and also they do break this barrier with this, with their liquidity provision. So you don't need to worry about the capped trade size. It offers boundless liquidity pools coupled with low maintenance margin, which minimizes the risk of liquidation. So it is a refreshing approach compared to other traditional services that we have. So you can take a look at all the pools that we have and the APR that you can get. From my calculation and the maximum that we can do, I think it is 2000%, which is really massive. Now, as you can see, we have an earn section in this, and one of the I would say major ways through which people earn in this is through liquidity provision. Liquidity providers in equation, they enjoy unique benefits. Unlike the common impermanent loss mechanism, equation offers and introduces the concept of temporary loss. They have this risk buffer fund, which I can show you guys right here. So when you click on basically any pool that we have right here, you can see we have this risk buffer fund, which it says it bear all of the temporary losses first before impacting liquidity providers. If its balance becomes negative, this indicates that the LPs are facing temporary losses. Basically, this risk buffer fund, it absorbs these losses, so the liquidity providers, they can navigate the market fluctuations with confidence. Now, this is something that we do not have in other platforms. And if we get the competitive analysis out in the open in the start, we have other similar exchanges like we have GMX and we have DYDX. Um, they do represent dynamic, they are dynamic players in the decentralized finance arena. They each offer distinct offerings that caters to traders who are seeking unique features and functionalities. Now, equation does stand out. Like I said, one of the first thing is their 200x leverage that it provides. So this is something that makes it stand out. But we also have this boundless liquidity pools that we talked about before. We have strong emphasis on security. They're creating a platform where flexibility and safety, it happens to coexist. The GMX, while it does provide leverage and liquidity options, it follows its own approach. And DYDX, it has its specific features and governance structure. We do have governance in this. I'll talk about more on that. But the thing that makes Equation unique is its commitment to community-driven model. They're allocating 100% of the revenue to the users, which is not seen in other platforms, which of course does add an extra layer of appeal. If you take a look at the user interface, you get all the things that are required. You get the chart of the pools that you're interested in trading with. Right now, I have the Bitcoin USDT chart open. You got all the tools to and all the indicators to be able to assess the chart in the right way. And in the bottom side, this is where you see your positions, the one that you have opened, the previous positions that you had opened in the past. On the right hand side, this is where we are able to open up new positions. Now, since this is a perpetual exchange, not a spot market in a sense, so we are able to open up long position for Bitcoin or any currencies that you're interested in, or short position. We have went over this multiple times in the past, the difference between spot market, perpetual market, whether the long position and the short position. And we have been through all the tools that we are given with to ensure risk management. So we have the option for limit order in this. You can, again, as I said, you can open up long and you can open up a short position on Bitcoin. That is um, upon your knowledge and your preference on what you think may happen. And of course, we get the option for leveraging. So even if you start small and you're putting down smaller amounts like 10, 20, 30, 40, 50 USDT, which does seem like a very minimal amount, especially when you're trading with the cryptocurrency that has its value in 37 to $38,000. But when you use leverage, that puts you in a higher position, as if you're trading at a higher position. If you come to the markets and you come to the pools, you can take a look at all the cryptocurrencies and all the pools you can, I would say, take part in, that you can invest in. You can see the APRs on the pools that we have, the 24-hour volume, which will indicate where people are mostly putting their funds in, and which particular pool is more active and how much fees is accumulated. Then we also, in the market section, you can take a look at 24-hour change and open interest and so forth. And this is a section where it will show you your positions. Now, since the market is performing good, so you can see most of them does have, it shows up as green. There is increase in value over the last 24 hours, which is looking good. That means people are making profit. Um, and if you come to the earn section, this is where you are able to stake. Now, as I said, we do have their native token that is called EQU. We have the tokenomics and the allocation on their documents, which is right here. And they do have governance model as well. So what happens in this is, when you stake EQU tokens, the APR that you get is 22.68%. And when you stake, you get VE EQU tokens, which are kind of like placeholders for your EQU tokens that have been locked. So you get these placeholder tokens in your wallet, and they basically represent 1:1 of the actual EQU token. But the tokens that you have received after you stake them, that gives you the governance right. And you have another option, that is that you add liquidity to Uniswap in the EQU Ethereum pool, and you receive the LP NFT, which you can stake, and you get an APR of 61.14%, which is almost three times more than what you get for staking the EQU tokens. So this is also something that you can consider getting into. Then we have position mining, and the APRs you can see here are massive. They're absolutely massive. We have average APRs ranging between 600, 500, 800. Then we also have this 1200%. That is absolutely massive. Then we have liquidity mining, which again offers uh, very decent APRs. So we're not short of ways and not short of options to invest in to get a good APR. And here you are able to contribute in the risk buffer fund mining. We have talked about the risk buffer fund and the APR that we get. Again, they are ranging in 700, 800, 900, almost like 1000% APR, which is absolutely amazing. You can take a look at the statistics, and if you come to the stats portion, this is where you can actually take a look at, have a better overview of what's happening with the platform. The total volume we have, it is about 623 million, almost like $0.6 billion. There is an increase of about $82.93 million in the last 24 hours. And then you can take a look at the chart and see how it is performing, because in a lot of cases, our profits will correspond to how the exchange is actually performing. When you open up trades, you're incentivized to open up trades, open up different positions. You earn rewards in this for open up different positions, and you also have the referral program. You can invite people, and you can also earn through that. I'll give you guys my personal referral link that will be in the description, which will give you guys benefits, and of course it will provide me with some benefits as well. So if you use the link that is in the description and you sign up using that, and you start trading, or start taking a part and contributing in the pool or in the RBF fund or whatsoever, what you get is you get 10% off the trading fees, and this is permanent. Plus, you get a 1.1x mining multiplier. Again, that is permanent. So if you are interested, make sure that you use my referral link that is in the description. I think this is a wonderful platform that equips us with all these tools, and it allows us to play with different strategies to manage our risk and to maximize our rewards. And the way things are looking, I think this is exactly what we needed. So make sure that you check this out. I'll give you guys all the links that will be in the description. Of course, if you like this video, make sure that you give it a like and share it with your friends who are also looking for an exchange to start trading with. And yeah, this is all of you guys in this video, and I'll see you guys in the next one shortly. So stay tuned.